Well, let's head on to the commodities market now. We have Mr. Bismarck Rouhani, he's the MD CEO of Financial Derivatives Company. Good morning, sir. Great to have you on the show.
Good morning.
Yeah, so it was
Thank you for having me.
great to have you, sir. So, yes, we finally have the rate decision in the U.S., and I guess no surprises here, or maybe surprise for some people. We know President Trump has been pushing for rate cuts. He met physically with the U.S. Fed chair when they were getting a tour of the building that's for the U.S. Fed there, one of their constructions. And he did say he would like a rate cut, even when he met with the U.S. Fed chair. But it's not happening, at this point. How are you seeing what played out?
Well, thank you very much. Let me say that we call this a dizzying day, because so many things happen on one day. It reminds me of an old movie I watched before called Training Day, with Denzel Washington. In the final act of that movie, he says, "What a day, what a day."
What a day.
So yesterday was what a day. The first time in 32 years where there have been dissenting voices, two dissenting voices of the 12 wise men of the Federal Open Market Committee. This is the first time in 32 years that we've had that kind of dissent. Two, the guidance given by Chairman Powell was, well, we do not know. We are governed by the data. He did suggest that the tariff inflation effect will only begin to kick in. It's only at that time you'll be able to say, yes, we will do this maybe in September. The president wants a cut in September. The chairman says, no, let's look out for the data. Also, what the market is saying is that if we're going to have a cut in September, it may not be 25 bips, it may be 50 basis points, which is good. So what that did essentially was to weaken the dollar, make sure, and you announced it just now that the price of oil, Brent, has gone up to $72 plus. This is good because when the dollar weakens, the price of commodities denominated in dollars increase. So we see that, and it's quite interesting that the question is that, what does this mean? The stock market took it, all indices went down, but after hours, we saw Meta, which is Zuckerberg, the earnings blew out the market, and it went up by over 11-12% after hours. Then this morning, Microsoft also had released their results yesterday, and Microsoft now appears to be the second company that will achieve $4 trillion of market capitalization after NVIDIA. So a lot of things are happening. And one other thing that happened, which is very significant for us, is that Ghana, for the first time in its history, dropped its interest rates by 300 basis points, 3%. That is huge. So, and it has gone down all the way to 25% from 28%. That's huge, right? So when you take all of this into consideration and take what have you just said now, the Nigerian stock market is on a tear. It's not just it's a runaway rally, but we warn as well that the Nigerian stock market might be overbought, and a correction could happen very swiftly if we're not careful. But all things being equal, we think that one, the Federal Reserve, the maintaining status quo was good for the market. We also know that today is the last day before the tariffs on African countries and all that, August 1st kicks in. So we are watching all of these variables at the same time, but it's very, very interesting day, and that's why I told you that it's a dizzying day according to the economist, and I say, what a day.
What a day. Definitely, what a day. And you did mention, history being made there with dissenting voices between the 12 wise men there for the U.S. Fed. So these two Fed governors that wanted a cut, this time, do you think it's from President Trump's influence?
No, I think the way the Fed is selected, the FOMC is selected, these are seasoned economists, and they don't just have a herd instinct. They look at the data, and some of them have the two that Governors Michelle Bowman and Christopher Waller voted for a rate cut, and that's two. And there was one absentee. So 9 over 12 is quite a number, and they are looking at the data, and I don't think it's politically motivated. I think economists are independent thinkers, and definitely, they believe that the time is here. Why? Another thing that happened yesterday was that the GDP numbers came out at 3%, which means that the US has avoided a technical recession. Normally, if that is the case, and that the economy is strong in terms of output, then does it need a further impetus to bring down rates at this time when we do not know what the total effect of the tariffs will be on domestic prices? So it is that argument they're having, and I think to us in Nigeria, I think the first thing to note is that we have a favorable balance. That is, the US exports more to us than we import from the US. So on a bilateral basis, Nigeria is not expected to suffer any tariff backlash. Two, Nigeria is, from a geopolitical standpoint, is non-aligned. So Nigeria is not going to get in the crosshairs of anybody as far as the tariff wars and geopolitical movement in Gaza and all those places. So Nigeria is in a good place in terms of maintaining its trajectory. Also, Nigeria, the IMF revised its growth projection for Nigeria and increased it right this time, and also reaffirmed the fact that we will see inflation begin to moderate later in the year. That is good. And we've seen some movement in the foreign exchange market again, which shows that people are now beginning to go and buy foreign exchange again. And we've seen the gap widen. In fact, the naira depreciated by about 1% to 15.54, and the gap between the official and the parallel market has widened to 20. When we spoke on Tuesday in the studio, the gap was only about 3 naira, which means that people are now beginning to order commodities and import commodities for the Christmas season. In our projection all along, we have said that we expect the naira to trade between 1550 and 1600 in the worst case scenario. But now that the price of oil is up $72 a barrel, it's good for Nigeria. Our production is up, and therefore we think that the depreciation of the naira at this point in time is short-lived, and it's not going to be a runaway situation.
Right. So what do you think happens to the naira, going into next week? And we're seeing some currency plays right now with the negotiations between the U.S. and EU. We did see the euro actually lose ground, against the U.S. dollar on the back of the negotiations there and the deal that was made. So the DXY is also seems to be strengthening, at this time. Any risk for the naira with all of that?
No, I think the naira's fundamentals depend on, one, the price of oil, two, the price of LNG, and three, foreign portfolio inflows. So what will happen on the 6th of August, there's going to be a treasury bill auction. If the rates don't go down too sharply, then the foreign portfolio investors who are enjoying the carry trade will remain with us. And that means that the naira will stabilize at current levels. In any case, we believe that the fundamentals are naira friendly at this time. And therefore, even a temporary depreciation of the currency due to external factors, shocks, will not have such a damaging effect on the value of the naira in the foreign exchange market. The naira is fairly priced at this time, and it's well above its purchasing power parity value of about 1,200 naira to a dollar.
All right, so it's definitely earnings season now, and we've had a couple of Nigerian companies report this week. I'm sure you've been going through some of them. Any standouts for you? We've seen consumer goods companies there. Some good reports. So far for HY1.
I saw Cadbury. Cadbury was quite impressive. We've seen Boa Foods. Of course, Dangote Cement have done some wonderful things. So the atmosphere for corporate earnings is very good. One, because sales are up, and that's we must bear that in mind. Costs are down, margins have improved, and more than anything else, these people are making more money because there's stability in the exchange rate, and that means they're not carrying excessive inventory or borrowing from their parent or suppliers, so that has actually mitigated the risk of what you call foreign exchange losses because of their due to parents and due to suppliers. So with that eliminated more or less, and sales begin to climb, then we think that there'll be some consistency in the earnings profile of companies. Having said that, don't forget that they had a backlog of losses right? So they have to claw back those and write off some of it. So the effect on taxable in what we call while the profit, the gross profit is high, but taxable income will be low because they have to write back claw back some of those earlier losses, right? It depends on, that's the accounting treatment, and the accountants will give you a better idea. So, 1 minute. So what we're looking at is that there's depreciation of the naira for now, for this temporary period, because of the front load, people buying things for the Christmas season, and the time to open those LCs is now because we're going into August tomorrow. We're also seeing that cocoa futures are up, but I think, Nadi, let's make a point here. We went on a market survey yesterday and we saw something very interesting. Almost all the commodities we're talking about showed a decline in price. Beans, for example, which has been sticky for a long period, has dropped by about 3% to 82,000 naira. Gari dropped also by 3% to 32,000 naira. Peppers fell all the way by 11% to 80,000 naira. And tomato basket actually fell by 31% from around 110, 120 to 75,000. Onions crashed all the way to 110,000. What is this telling you? Telling you, one, the harvest is here. Two, that because the exchange rate is stable, export smuggling of commodities across to neighboring countries has reduced. And as a matter of fact, we are beginning to see import smuggling. People are now smuggling yams and commodities from Benin Republic, from Cameroon, back into the Nigerian market. So that confirms to us that we are going to be having some moderation in food inflation, at least for the next 2 months. One interesting thing, though, is that the price of the new yams are falling, but there's a limited amount of use for new yams. What you need is old yams, because you can use that for pounded yam. You can use that for all sorts of cuisine. So you take it, the commodities, the ingredients, pepper, tomatoes, onions have all declined. We've seen the status quo as far as chickens are concerned. Turkey dropped, but generally speaking, there's more food now available in the markets than was there a month ago.
Right, and I did try to buy plantain recently. It was always 5,000 for a bunch, but I think the lady said it was about 4,500 or 4,000. So I guess we're starting to feel that. Hopefully, we have the dirtiest December. When it comes to you did mention that.
We have an interesting dirty December, but before then we will have the October. In the stock market balance, we have what we call the October surprise. So let's wait and see. Never say never.
Thank you so much. That's a good place to anchor there. That's Mr. Bismarck Rwani. He's the MD CEO, Financial Derivatives Company. Thank you for coming on today, sir.
Thank you for having me.
All right, we'll take a break now. When we come back, we'll talk about credit to the private sector right here. What's happening there? That's in a moment. Just stay with us.